Hi guys, Andy here. I hope you all have a good weekend. So I would like to have a look at the FTSE futures here, and today I would like to combine the higher time frame with the lower time frame. So I'm planning to add more instruments to the channel, and therefore I have to optimize my recording time. So once a week, I will combine the higher time frame with the lower time frame. Like during the weekend, I will already provide the analysis for Monday because between the weekend and the Monday opening, not much is happening. We have the Asian session, but for the European indices and US indices, not much is really happening during the Asian session. Or I might also provide, like on Friday, immediately the higher time frame analysis, because what happens on a Friday does not really influence anymore the higher time frame. So this is how I plan to do it. Let me know what you think about it in the comments section, or if you have any other suggestion for the channel, please let me know in the comments section. But for now, let's move on to the analysis. So we start with the higher time frame, and here we are looking at the weekly. So my take on the FTSE is that we did a wave one here to the upside in 5 waves, 1, 2, 3, 4, 5. Divergence is not really outspoken here, but still, I would assume that the high is in here based on the other indices that I also expect more downside. So I believe we are heading towards this area here, the wave 2 area. So if we take the length of our wave 1 here, then the area between the zero point 0.5 and the 0.854 FIB retracement is the area where we should go as a wave 2. However, this does not always play out. We do not always reach this wave 2 areas. These are just guidelines. These are not really rules. So it might be that we enter or that we arrive somewhere above this area. And I think if we look here at the daily, the first area we should look at from where we can expect a reaction, and which is an interesting buying area for investors, is this area here, I believe. So this is our wave 1 high. So wave 1 here in the higher degree. And so we are working on a WXY correction. So, and this here is the area where our Y leg should end. So if we take the length of our wave W, the length of our wave X, then here the area between the 1 and the 1.618 FIB extension is the area where our Y leg should end. If we reach the lower boundary of this area, this would mean that we are getting quite close to the wave 2 area, wave 2 in the higher degree. So that could be enough actually for a wave 2, so that we do not go all the way down, but we start to reverse somewhere here. We can also be already a bit more specific about this wave Y area, because I believe this wave Y here is also unfolding as another WXY structure. So if we take the length of our wave W, the length of our wave X, then here the area between the 1 and the 1.618 FIB extension is the area where this wave Y should end. And as you can see, this nicely coincides with this area. So I definitely expect a reaction from here. So I believe this is the buying area for investors. I would wait for this area and then buy here. I don't think this will play out this week. So I think we can do another higher time frame analysis to be more specific on this area, where to buy on this area. But as an investor, this would be on on my radar. Here I would like to buy. Then for traders, let's go to the lower time frame. Here we have the 4-hour chart, and so I believe, so here we have WXY structure, which I explained in the higher time frame, and so I believe this Y structure is again unfolding as another WXY structure. This might look all very complicated, but actually these are very nice structures here in the FTSE. It's all moving in three, so clearly corrective. 1 2 3, 1 2 3, 1 2 3, 1 2 3, 1 2 3, 1 2 3. So yeah, you just need to label it very well. But once you do this, it all makes kind of sense. So this WXY is again unfolding as another WXY. And so here, this WXY, as you can see, we already reached the wave X area. So we did this last week, and even the week before, we already reached this area. And so as you can see, I changed my count here. So if you follow my daily updates, you know that I believed that like actually here we had enough for this wave X to finish. This was our correction, and it's still indicated here in red, but now it became my secondary scenario. So WXY, we have a nice three-wave structure ending into this wave X area. So this is actually enough to have a correction to the upside. But what I see among the indices is here on the 4-hour that we start to break this bearish channel here in RSI. So this is a bearish cycle, and we start to break the RSI trend line. And this is a sign that we might do an extra corrective leg here to the upside. So it's still very early among all the indices. Like we can still reverse from here, and so then this would be the correction WXY. We hold this this high here, and we see further downside. But yeah, I have to make a choice. And yeah, I see it among all the indices that the 4-hour is breaking here. It's still very early among all the indices. We still have a chance to reverse from here. So let's say that this then was a little fake out. But at the same time, it's also a very nice target for for the big money. Let's say a lot of traders will put a stop loss level here on this high, expecting more downside from here. So then, ideal target for the big money, they just take out this high here. We have the double correction, and then they move on downward. So this is now my primary scenario, but I have to say it's still very early. If we see on Monday and Tuesday that this is holding here, that we are reversing from here, then I have to switch again to my earlier count, the WXY here. So yeah, sorry for this inconvenience, but these are markets, and I just adapt to what I see in the data. And so now I have a little preference here in the double correction WXY. then the correction that is finished here, because of the trend line is breaking here, and it also looks like an ideal target for the big money, for the market makers to take some liquidity here and then go further down. So then, okay, WXY, then we know the target for the upward move. If we take the length of our wave W, the length of our wave X, then here the area between the 1 and the 1.618 FIB extension is the area where we can expect that the Y leg would go. However, I don't think we will reach this area. Yeah, it might be that we here reach the lower boundary. So yeah, the 1-to-1 ratio, but we should actually stay below this high for this count to be valid. And also our wave X area is situated here. So our wave X area is the area that we find by I'm sorry, wrong starting point. Here, if we take the length of our wave Y, then our wave X should go here into the area between the 0.5 and the 0.854. So I would expect that if we get this additional corrective leg, that we end somewhere here maybe, and actually it is enough just to take out this high. Then we have WX Y, short Y leg is always possible. This is the minimum requirement, taking out this high. But yeah, if we add the Fibonacci levels, the main expectation should be that we go somewhere here into this area. And if we do so, I believe this is a nice short opportunity from here. What we can also do on the lower time frame, here we have the 1 hour. Like this wave X here is actually a nice structure, A, B, C. And so if we could get a bit more data here, like maybe we also get a nice ABC here. So then, or the WXY, then it would mean that based on this data, we could also calculate a more specific target for this wave Y to end. So this is also I definitely will look at next week. So if this is happening, I will also add it to my chart. If I start to see some ABC structure here, some WXY structure, as soon as I think there is enough data to be more specific on this wave Y, I will add it. I will add it to the chart. So yeah, for now we cannot do much with this. Also, like I said on my video on Friday, for the moment this can be anything. Like if we do not take out this high, still the primary scenario of last week that became now the secondary scenario can play out. Like I said at the beginning of the video, I know it's early to change between my primary and secondary scenario, but I choose to change because I think seeing this break among all the indices is an indication that we will see first some more upside before we go down again. However, if we return from here on Monday, on Tuesday, then I have to switch again, unfortunately. So this is my analysis, higher time frame analysis and lower time frame analysis combined. I hope you enjoyed it. If you did, please like, subscribe, comment to support my work, and I see you back next week. Have a nice day. Bye bye.